Vale is a producer of iron ore, nickel and other metals. It was founded in 1942 as a state company and privatized in 1997. The main production facilities are located in Brazil, and the company also operates in Canada, Mozambique, Indonesia, Malawi and Oman. In 2021 the company paid $2.71 dividends per share, which is a lot for the stock with a $14 share price. $1.45 forward dividends per share also looks pretty good. Payout ratio of 49% is not very high, but the company has unstable dividend track record, which is understandable because metal prices are volatile. The dividend yield is so high because the company is very cheap according to all valuation ratios, and it's cheap for a reason. Moreover, Vale is one of the most undervalued companies in the sector. What I want to note is that as an exporter, the company would benefit if Brazil's currency devalues to dollar because the company's operating expenses would decrease in dollars while revenue stays the same. And vice versa, if Brazil's currency revalues to dollar, it will have negative impact on the company's earnings because the company's operating expenses would increase in dollars, but revenue stays the same. Also, the company produces industrial metals, not precious metals, and the pricing of industrial metals is highly dependent on the situation in the economy. At the beginning of the year, Singapore iron ore futures rose strongly and exceed $130 per ton. The main reason was strong forecasts for growth in demand for raw materials in China against the backdrop of easing monetary policy. Now the fear of a recession has brought down the prices of base metals. Monetary policy tightening led to an increase in the dollar index, and this is also putting pressure on metal prices. Now there is a downward trend in investment in the mining sector due to the unclear economic outlook and the complex relationship of companies with environmentalists and local communities. London Metal Exchange Index is down 32.2% since its peak in March, and by the way, Vale stock has a strong correlation with London Metal Exchange Index. The company has 4 operating segments. The largest one is iron ore, that made up 70% of the company's revenue in fiscal 2022. Iron ore is used to smelt cast iron and steel. Today there is not a single branch of the manufacturing economy that operates without steel or cast iron. Iron ore is a non-fungible commodity, and its quality varies. However, before iron ore is used for its intended purpose, it undergoes enrichment at mining and processing plants. Methods of enrichment in the extraction of iron ore are constantly being improved. Therefore, at present, the requirements for the amount of iron in the composition of iron ore are constantly decreasing. The iron ore consists of compounds of the ore-forming element, mineral impurities and waste rock. The company has 4 fields in Brazil, and by the way, Brazil is one of the leading countries in the world in terms of iron ore reserves. They are estimated at 50 billion tons. The company owns 10 iron ore pellet plants in Brazil and 2 more in Oman. The main consumer is Asia, 81%, including China, 67%. Europe 8%, Brazil 8%, and the Middle East 3%. The total ore reserves are estimated at 13.4 billion tons, of which 5.13 billion tons are proven. The production volume in 2020 amounted to 300 million tons of iron ore, and according to Fitch Solutions, Vale's production capacity should grow to 400 million tons a year at the end of 2022, and 450 million tons a year beyond this. Also, Fitch Solutions expects iron ore prices to follow a multi-year downtrend as culling Chinese steel production growth and higher output from global producers will continue to loosen the market. In the long term, the firm forecasts iron ore prices declining to $65 per ton by 2025 and $52 per ton by 2030, driven by a combination of weaker demand growth and stronger supply loosening the market. The other 3 operating segments are coal, non-ferrous metals and others. The production of non-ferrous metals is carried out by the Canadian subsidiary Vale Canada Limited. Nickel is mined in Canada as well as in the Brazilian state of Para. The company owns or has stakes in concentrators in the United Kingdom, Japan, Taiwan, China and South Korea. Copper is mined in Zambia and Brazil, also Para state, as well as in Canada as a byproduct of nickel mining. Cobalt and precious metals as byproduct of nickel enrichment are also mined in Canada. Nickel ore reserves are estimated at 288 million tons. reserves, of which 148 million tons are proven, and copper ore reserves are estimated at 1.33 billion tons, of which 230 million tons are proven. Coal mining is mainly carried out in Mozambique. The company has another special operating segment. It includes infrastructure facilities. The company owns railway lines in Brazil and around the world. The company also owns a number of seaports in Brazil and around the world. Also, a significant part of the electricity demand is provided by its own power plants. There are 3 large and 4 small hydroelectric power plants in Brazil. There are also power plants in Canada and Indonesia. We can conclude that the main operating segment of the company will be bringing less and less revenue and net profit, which is in line with the forecast for the company. Vale's revenue is forecast to decline at a rate of 9.8% per year, and Vale's earnings are forecast to decline at a rate of 10.2% per year. Everything else is alright. The balance sheet is good and the stock is very cheap, even though it's cheap for a reason. That's all for today, and thank you for listening.